roll call, but I'm the only one here. But we'll call this meeting of the Audit Committee to review the results of the audit with Joe Senafani and Catherine Patnaud, our auditors from PKF, O'Connor Davies. Joe, I'm just going to let you give us a quick overview of the reports. I think most of my comments and questions will come with the management letter, so if you do that last. But anyone else who has questions, this is a very informal meeting, so please just chime in anytime you want. All yours, Joe, or Catherine, whoever's doing it.
All right, I'm going to start, and then I'm going to hand it off in the middle. But so you have the reports, the CAFR, the federal and state single audit. We have the communication of those charged with governance, and then the recommendations. So those are the four. At the beginning of the financial statements is the unmodified clean opinion, which is what you're looking for. Always point to the MD&A as a good executive summary of what happened during the fiscal year. So general fund, your unassigned fund balance went up almost 2.5 million, ending at almost 17.5 million, which is 19.5%. So you're in a very good position there. Then the MD&A also talks about some of the other major funds, cap projects. There is a new major fund this year, the disadvantaged fund, due to the calculation of major fund. That was elevated to be a major fund this year. So you see that up front instead of in the back, as it was in prior years. Also talks about internal service. And then major capital asset activity, major long-term debt activity, issuances, payments. Again, general fund balance on a GAAP basis, and net change in fund balance was $1,255,000. That basically was generated looking at the RSI on pages 84 and 90. Your revenues were under budget by 1.7 million, but your expenditures were under budget by 2.9, almost 3 million. Resulting in the increase of about the 1.2. The water and sewer fund operations, the increase in that position of 915,000. Most of that was due to just an increase in charges for services, and his expenses were level with last year. The internal service fund had an increase in that position of about 934,000. This is pretty common across the state because for the last quarter of the year, most people were going to the doctors and that type of thing. So, and in some ways, we expect a reversal of some of that, probably in what should have already happened in fiscal 21. Footnotes, pages 38 to 82. I just highlight that we do have a footnote, as well as it's in the MD&A, it's in the transmittal, but a footnote on the coronavirus as a contingency note, as far as just not knowing what's happening with that and what the impact will be going forward completely. So turn over to Catherine to highlight a few other things.
So we also had the federal and state single audits, both of which had an unmodified opinion. For federal, we tested the child nutrition program and highway planning. And for state single audit, we tested open choice, school security infrastructure, and municipal grants and aid. And on all those programs, we had no findings or question costs. You also received a communication with those charged with governance. In that, we discussed significant accounting estimates, which include pension and OPEB liabilities, and the incurred but not reported for the medical fund. The financial statement disclosures were consistent and clear. We received representations from management, and you'll see at the end of the letter, we had one past adjustment relating to the infrastructure. When it was added into the system, there was an adjustment to the accumulated depreciation. There's also some new applicable Gasb standards. Gasb 84 will be applicable for 2021. So we'll be talking about that during planning for 2021, just mainly assessing the defined contribution plans for inclusion in the financial statements. And for 2022 will be leases. So if you haven't already, it's definitely time to start gathering information on that. And I think what you're all waiting for, is the recommendations. So the first recommendation is related to the golf course. The rain checks and gift certificates are currently documented by handwritten note. Our recommendation is that they should be in the accounting system, so they're not reconciled, and that rain checks redeemed should be retained and attached to the report given to the finance department. The next one is on capital assets, and this one we've definitely seen improvements this year. The ones that remain are the water and sewer fund capital assets that were added prior to 2018. There's no detail of the individual assets. So our recommendation is performing a capital asset inventory and just getting a detail of those assets prepared and getting that into the system. And then the other piece is the education equipment, which is maintained in a capital asset system by the Board of Ed. However, the system includes all assets below the capitalization threshold, and it can't print a report showing just the capitalized assets. So we just recommend going through that and making sure you can get a listing that does match up to the financial statements. For water and sewer billings, currently there's meter readings prepared by the town water department, and the billings are performed by an outsourced vendor. We just recommend that the town reconcile the actual usage to the vendor, what the vendor uses to calculate the billings. Our next recommendations, does anyone want to discuss those before we move on?
No, I'm good with those. I don't know.
Okay.
Rosha, have any questions or Kevin, any clarifications or
I'm all good, Jeremy. Thank you very much.
Kevin? You okay?
We are focused on them. We have a couple of systems limitations, and then the water and sewer limitation is that, as Catherine mentioned, we don't have a detailed listing from when those assets were brought into our new system back in 2008, 2009. So it would require taking a complete inventory of all of the assets from that point in time. So we're evaluating that and trying to figure out an approach that is not unduly burdensome on the water control system.
Yeah, I mean, that kind of surprised me that prior to 2018 that we don't have the details. It seems rather recent. I mean, did we have it and then boom, 2018 we lost it, or?
Gail, do you want to speak to that?
Yeah, we were doing these statements differently back then. And when we changed the way we're doing it, we started adding them to the system in 2018.
I noticed, and this is to Kevin and Ashley, I noticed a number of these recommendations are repeat recommendations from the prior year. And I know last year when we did the audit, things I think unraveled at a lot of levels last year through the meeting process, because when we sat down and did the audit last year, did the review, we talked about getting periodic updates on the status of follow-up on these comments from last year. And I think the Board of Finance, we probably fell down a little bit on that, during the year, because I don't recall us, once we started doing remote meetings, we started doing it at pretty much abbreviated schedules. But we're going to be putting in a request to both of you to come up with your plan of action on all of these items for the coming year, to let us know what can and what cannot be addressed in the next few months. So you can continue on.
The next ones relate to the cafeteria and disadvantaged education funds. With the cafeteria, there were some improvements from last year. The only remaining balance sheet item that's not included in the general ledger was the unearned revenue relating to prepayments and student accounts, which we did include as an audit adjustment this year. So going forward, that should be in there. General ledger beginning balances didn't agree to the prior year financial statements. And so the financial statements were prepared using a combination of the general ledger and last year's financial statement balances. So with those, we just recommend that all audit adjustments get posted, and then that should clear up any issues going forward. In addition,
You're
Yep.
talking about the general ledger maintained down at the Board of Education.
correct.
Yeah, okay.
In addition, for the cafeteria fund, the revenues are recorded based on deposits currently, including prepayments on student accounts. So we recommend that revenues be recorded based on sales, and that the prepayments on student accounts should be recorded as a liability. And for the disadvantaged education fund, grant balances are monitored using a fund balance report. However, there's no accounts receivable or unearned revenues in the general ledger. So we recommend that the grant revenues be recorded and include the related receivable or unearned revenue accounts as necessary. The next recommendation related to the education tuition revenues. There's certain tuition revenues that are netted against the education expenditures. In fiscal 20, a portion of those were reported in the disadvantaged education fund as revenues and expenditures. However, we recommend that all of the tuition revenues and expenditures are reported gross.
On that one, are we talking about tuition revenues from other towns, or are we talking about the excess cost grant?
Yes, it was the Hartford tuition.
Just the Hartford?
I think there were a few other small towns, but that's the biggest portion.
Okay, so
We also
go ahead.
revenue from Cromwell for students.
I can't hear you.
Can you hear me now?
Yeah.
I was just letting you know that we also do receive revenue from Cromwell for students that attend our BTA Academy, but it's a very small portion in comparison to what we receive from Hartford.
Okay, what would account for some of them going to the disadvantaged fund and some being treated as a net?
So the way we budget for our tuition is we get what we assume what our projection would be from the excess cost, and we reduce it when we're actually putting it into budgeting for our tuition costs. So when we're budgeting for tuition, we already are accounting for the credit we're assuming we're going to get from excess cost.
You're assuming you're going to get the credit.
Right. Whatever we're assuming our funds are going to get from excess cost, from the excess cost grant, we take that from what our actual expenditures are planned to be for the budget. So we're only budgeting for, it would be tuition less the excess cost.
Yeah, all right, this is
Right.
Jeff. This is Jeff.
Hi,
Our general fund budget is net of not only excess cost, but of the Hartford choice. So when you look at our tuition numbers,
Yeah, you're talking about the regular choice grant.
no, I'm talking about a reimbursement for outplacement of choice students.
So that's in addition to your other choice grant line that I
Yes.
see in your report.
Yeah, which and that normal choice grant line, which you're talking about, doesn't show in the general fund either, because of
No.
course that's a grant.
Right. So the choice tuition you're crediting. Okay, as long as you're, I mean, that when you and I went over this the other year, Jeff, that's what we had set up to net the excess cost grants.
Yep.
And that to show it properly gross, like the auditors want to see, the idea was to have a line in your grant fund where you would show the actual revenue and then move a corresponding expenditure amount from your board budget during the year to zero that out at the end of the year in the separate fund. Is that still the way you're doing it?
Well, we're not doing it that way now, I don't believe, if I'm understanding what you're talking about. We don't show it in the grant. We don't show it in the list of our grants, Ashley, if I recall, the Hartford dollars.
Not the Hartford ones.
Oh, the excess.
The excess cost grant.
Excess is there. Excess is there. We literally, Jerry, how they operated here, we literally get an expense in and we expense it directly against the grant fund and pay for it. So it really doesn't go through the general fund though.
So your excess cost grant line
Yes,
should have a zero balance at the end of the year.
exactly.
Yeah.
Exactly.
Okay. All right. And as long as we understand, what it is when you're putting your budget together, what it is that you're netting as far as the Hartford tuition,
Right.
I think that's fine.
We have the report that I use and the formulas that I use to get those numbers. We come out with one spreadsheet that shows what the costs are going to be of all the tuitions and all the transportation. And then through the calculations, we minus out, and it's on the same spreadsheet, we minus out excess costs that go to each one of those. We also minus off the money coming in from Hartford Choice for tuition. So it's all shown on one panel on how we get to our bottom line for general fund, if that's what you're speaking.
Okay, to take care of what the auditors are saying, though, Joe, couldn't we just do a budget to gap reconciling item for the whatever's netted in the budget?
Yeah, or a lot of times we just as an audited report only entry show it in the grants fund as a revenue and expense, so it's reported gross somewhere. If
Okay.
that works.
Yeah, that's fine. Okay. All right.
The next one is the Board of Ed doesn't have a formal process for the approval of new vendors. And in addition, the accounts payable and payroll clerks have the ability to enter new vendors into the financial software. So our recommendations were, one, to develop and implement a new vendor form and approval process. And the other part of that was recommending that the accounts payable clerk be restricted from having the ability to enter new vendors. If that's not feasible, we recommend that the master vendor file be reviewed monthly by either Jeff or Ashley.
Okay, if I can answer, we have done some changes since the last time we met. For an example, we don't yet have the formal form we should have, which we are planning on putting together to be able to say what we want to know about a vendor before somebody approves it. For at least the last, it's probably 6 months now, all vendors are approved by me before they get put in to the vendor list by the accounts payable. So it's better than it was, but we don't have the formal documentation on what I'm approving on and having a master file on it. I just noted in the file that goes into the accounts payable. So I guess we're partially there. We do have more than one person. Well, let's put it this way. We have somebody approving new vendors that is not involved with paying those new vendors.
Right. But the risk really isn't the approval. The risk is if somebody does something wrong, they're not going to ask for approval. They're just going to put it in because they can. So without some sort of monitoring, not really accomplishing the control objective.
Okay.
All right, so we'll have to look at that.
So you're saying that I should probably, if I was going to continue to be the one to sign off on the vendors, then I should control the file.
Or
put them in the master list.
Or just someone other than AP. I mean, in some towns, the payroll clerk will put in the AP information and they'll segregate duties that way, just not the person who actually pays the bills. So it doesn't have to be you, it just has to be somebody different than the person who processes AP.
Oh, we were trying to, and I do, believe me, I understand, why we want to do this. It's a very good idea. And I think Catherine would tell you that I said last time when we were going over these things that I wanted to make sure they were changed by the time we got to the next meeting. Well, we only got halfway there. So I do understand how we want to do it. I was trying to not have to have 3 different people involved in it just to get the list. So, but we understand, and we'll actually get the form. And then I will not have the accounts payable person add the vendor into the list. I'll have someone else. It probably will be myself.
Okay.
Journal
next-
entries?
Yep, the next one is just establishing a formal policy to approve journal entries. So we recommend that it's done either by Jeff or his designee.
Can't hear you again.
Can you hear me?
Can't hear you.
I'm not on mute. Can you all hear me now?
Now, yeah.
I was just letting you know that since December 1st, I'm the one that's been taking over the journal entry since the roles have changed.
Right, and let me say to you that after our last meeting with Catherine, all the journal entries that have been done since that date, and I think that was sometime probably earlier in the fall, maybe, Catherine, I've approved all journal entries. They have not been done by the accounts payable people or by the our bookkeeper. And that's not gone to Ashley.
Okay.
You know, through our system of infinite visions, Kevin, I don't know if you have the same exact type, but what they have to do is they've got to post their request for journal entries. And right now, the only people that could, well, it used to be me, and now it's the only people that could approve it is Ashley. So it just happens in our system. They put them in there, and we actually, in order to have them go forward, we have to approve them. So the separation is already made.
Yep.
So I think we've already done what you are noting for us to do here.
Formal write-up. Would that be helpful for you? We have like a formal documentation of the changes that we're making, so we could kind of get this off of our recommendation sheet for next year. Is that what you're looking for specifically?
Yeah, I think what they're saying here too is that you should have a policy, and policies are usually documented and approved by your board. So you should document these things, accumulate them, and periodically have the policies approved as your accounting policies.
Okay.
And the last recommendation relates to accounts payable. During our audit, we noted that there were Board of Ed checks that were backdated to June 30th for amounts that were related to fiscal 20. And we also identified various invoices related to fiscal 20 that were charged to fiscal 21, which we then made an audit adjustment to reclassify as accounts payable. So we recommend that transactions processed after June 30th, but are for goods and services received before June 30th, be coded to the correct period when paid and reported as accounts payable. We also recommend that check runs be batched by fiscal year when processed to ensure the transactions are charged to the proper period. And we recommend that invoices are charged to the correct fiscal year as they're processed.
Can I get a little background explanation as to why this would occur?
Well, I think what the best example is that if in fact we have contracted or something to be done, let's say in the 1920 fiscal year, and it's contracted, it's done, it's ready to move, and the final payment for that work to be done, we don't want to release it until after July 1 because it's not ready to be done, but it's out of that year's budget. So it's already committed, it's encumbered. It is simply in a situation where we might already have the check cut, but we're not going to pay it until we actually have the service complete. Other than that, we would end up doing on a possibility on a last payment for a contract, whether it be for equipment or whether it be construction or anything else, we'd have the last payment be in the next fiscal year, which of course then doesn't match with how our budgets match. We'd have a surplus in one and we'd have a deficit in another. That's the practicality of it.
Kevin, don't you have the ability to do a 13th period for checks? So you're issuing checks after year end, but still being charged back to the proper period?
That is what we do. We actually keep the current year ledger open for 3 weeks. The way Infinite Visions are the accounting software that we both use, what would happen is we'd have 2 ledgers open. for an overlapping period, we would book the expense into the old year, which then systematically gets recorded as an AP. Basically, we would cut the check because it's a new year check, and then the system would automatically push it back to the old year with an accrual. It's a systematic approach that AP does, and it's built into Infinite Visions. We have a cutoff. I send a memo that I love to think is followed, but as to what the cutoffs are for submitting everything. But yeah, that's what we.
But, and that applies, or that's available to both you and the Board of Education, right?
Yes, it's a software feature. Yep.
So I'm not sure what the need is to backdate checks.
Well, I guess our accounting folks next door here are not using that software. They're doing it in a manual situation. I know the policy of the town and the Board of Ed, although it may not be a formal policy of the Board of Ed, in case you asked Jerry, but the policy of the town, we understand, is to leave the accounts open for a week or 2 weeks after. And I've heard my accounting people here say that they cover the same policies as the town does, but maybe they're not using the software. You're saying to me, Kevin, that it's an automatic in Infinite Visions?
It's a one-step process. Once you kick it off in Infinite Visions, it will actually create 2 journal entries, one in the old year that accrues and one in the new year. And so if you were to look at the town's accounts payable account at year end, it's quite large because we're accruing all of those items, and it's not a difficult process, but it's the process we run for each of those 3 weeks with the old year activity. Because again, we're cutting the check in the new year. The check is dated whatever the Thursday date is in July when we cut the check, because that's when the tax is actually going out the door. But we're accruing automatically in Infinite Vision.
Yeah, we don't. I don't even know that we knew that was available. The way we use the system right now, I've never heard anything being done like that down here. So if we can get involved in that system with that software, then that's what we do, and it would take care of our problem.
And we can certainly share those procedures.
Yeah.
Actually, you could get together with Kevin to see how this thing really should happen, because that's a significant issue when we're dealing with budgets and trying to come down to what's left and what's approved and authorized. We want to be able to have good cutoffs on this stuff. So let's have the 2 of you guys get together and get everyone on the same page. I don't think that'll be a hard one to fix.
Nope. Great.
Okay, Catherine.
All right. That was the last of the recommendations. I think the only thing was Kevin had wanted to me to bring up the accrued payroll entry we had made for the Board of Ed, just as to incorporate that into the budget process next year.
What was that about?
We had made when we tested accrued payroll, the entry was large enough this year that it wasn't immaterial, so we made an adjustment for accrued payroll for the Board of Ed's expenditures, and Kevin just wanted to mention it about including it in the budget process, so in case it grows larger next year, it doesn't throw anybody over budget.
For budget purposes as well as GAAP purposes, or
Correct.
not just GAAP purposes? Both.
Both.
Jerry, if you were to look at RSI on the Board of Ed, when at the year end, we talked about a $400,000 surplus after the 2% transfer.
Yes.
The number, if you look at the RSI in the published CAFR, is I believe it's about 260.
Yeah, 250.
And part of that is because of the adjustment.
Okay.
So I didn't want you to have a lingering question of how come we heard 400, now we have 260.
I have it circled.
There were a couple of factors, but that's really the biggest driver. I want to say that was $90-something thousand right there.
Okay.
Yeah.
So that's an issue that that the Board of Ed needs to look at when it's putting its budget together. The budget doesn't go on a cash basis; it goes on an accrual basis. So it's a real number of days, not 24 payrolls or 26 payrolls or whatever. You actually have to do a real calculation on payrolls as far as your budget's concerned. So hopefully you're in the process still of fine tuning those numbers. You know, if it's 140,000, how much did you say the adjustment was? 90 or
90 something.
90-ish.
yeah? So I mean, 90,000's enough of a number for you to be concerned with, I think. So take a look at that, and if you have any questions on how the accrued payrolls work on the budget, you can talk to Kevin because he has to do the same thing over on his side of the budget.
And just one point on that is it became more pronounced because we have what I conveniently call the stub period.
Yeah.
If you look after July, often there's one day. When payrolls end on a Saturday, we might have one day. Last year it was 2. This year it's actually going to be 3. It's more significant. So, but Ashley, if you want to talk, what we did up here is we actually, after the last period, before closing payroll, you have an encumbrance in the payroll system. We took that as our placeholder and did the manual entry to accrue for it in the old year. So it was actually not too painful, but got us to the place. So anyway, we can talk through that.
Okay, thank you.
Anyone else have any questions on the comments and recommendations? I have none. Any other comments you want to make, Joe or Catherine? I know it's been a challenging year. I know my people have had a challenging time doing audits remotely. And how was it for you? How specifically here in Berlin?
I think it went well.
Yeah.
That definitely requires some adapting, and the hard part, I mean, it works well, and we talked about the travel and all that, but everything's a little bit more delayed. We're not on site, and as you know, and kind of can get the answer right away and move
Yeah.
stuff along. So other than that, though, we got what we needed. Everybody was cooperative, and we got through it without any issues.
Well, I'd like to say to all of, all the finance people, town and Board of Ed, it's good to see the reports come through without any serious issues. We always expect there to be comments on how to improve, so those things, we take them and we fix them as they come along. But it's good to see no problems with our federal and state grants. Our financial condition is looking well at this point. We still have some challenges as far as the COVID stuff in front of us, but I think at this point we're doing pretty well. I have nothing else, so I guess at this point I can adjourn the meeting myself without asking for anyone. But thank you all for your time, and we'll be talking to you guys.
Thank you.
Thanks.
All right.
Bye.
Bye. We'll see everyone.
Yeah.
Bye.
Bye.
Bye-bye.